The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials down 34. You get the NASDAQ off 10. S&P's are down 6.5. We have the gold contract down $2.30, trading at, let's see, where are we at there? We're at $12.52. You get silver down 21 cents. Man, silver's going all over the place. At $16.92. Platinum is at $1,026. You get the light sweet crude contract down a buck at $43.22. And the notes down one tick, 129.22. Bonds are off 17 at 162, and good old King Dollar's up 24 ticks at 94.50. And you talk about volatility, man.
How about that oil yesterday too? Right after we got off, it went up, and now it's down, and a buck here, about a buck there.
I know.
Yeah.
I know. Could you imagine having an oil field, a buck here and a buck there?
Yeah.
Hundreds
or an oil
of
company,
millions.
Right?
Yeah. Hundreds of millions of dollars. No
sure.
doubt. Let's go over to our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. And don't forget, folks, every trading day, right here at TFNN, 12 to 1 Eastern Standard Time, you trade options. You want to learn about options, an amazing program, and you can get it right on your cell phone. So if you're in the West Coast right now going to work, remember that just go to TFNN.com, hit Tiger TV, get great HD video, audio, all of the above. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Hi.
What in the name of Alan Greenspan is going on with these markets?
I'm telling you, man. This is like, you know, what has happened this morning, folks, is this. You had flat markets, about 7:30, 8 o'clock Eastern time. And then, basically Draghi was talking in the European Union, and nothing was happening. And then all of a sudden, boom, dollar goes down, euro goes up, gold goes up. Then everything reverses again. You gotta love it, man.
Just so you know, Tom, and you can appreciate this, I'm sure this happens to you a lot. I'm getting calls from all over the country from grain traders and commodity traders going, what is going on with, can anyone explain these rallies to me? And I'm like, you guys got to be watching the dollar.
I know, man.
Sure, you're watching the dollar because the dollar is really dictating what's going on. And the grains, it's more than the dollar, right? Because they're going up on, well, maybe weather's starting to creep into the grain markets a little bit. So, it's been a crazy couple days.
Yeah, and it's like when you said to us yesterday, Kevin, when you started with the weather, because as we start in the show, right, the dollar was positive. Now it's going negative again. And that's all commodities really need is a weak dollar. But when you throw weather on top of it, right, that's a whole different animal, man, right?
I mean, if you're trading commodities, you have to keep an eye on the dollar.
Yeah.
Have it up on your screen and know what it's doing because there is a macro force between a lower dollar and higher commodity prices, and you just have to be cognizant of it. Now, that doesn't mean that micro forces can't come in interday like inventory numbers in oil and things like that and change the markets, but you have to pay attention to what the dollar's doing.
Yeah, no doubt. And of course, right? I know, man. You gotta love it, man. We're right in the middle of earnings season too, right?
Right. Oh, and we have, as you can see, watching swim lessons and watching, we're doing earnings plays every single day. Last night we did Under Armour and Yum Brands.
Yep.
Yesterday during the show we took off our Netflix and IBM earnings plays that we had on from 2 days ago.
I saw that. Yep.
Yeah. And so we're having a lot of fun with that. I mean, I found out what's going to be on my gravestone.
What?
Trade probabilities. Dead wrong, but profitable. That was our theme from yesterday's show.
That's a beauty, man.
Yeah. So we're having a lot of fun with that. And that's what happens if you play the probabilities right and do the fundamental right trades. You can be dead wrong, but profitable.
Oh, I'm sure every option trader out there knows that at the beginning of their career, they hit a big option play. They came into work thinking they're going to make a fortune, and guess what? They didn't because they paid too much premium. I remember the first time that happened to me, Kevin, it was like 1993 or something. And, man, I was going to make so much money, and guess what? Nope. I might have made, like, if I thought I was going to make $1, I might have made 20 cents. Do you know what I mean?
Yeah, isn't that the worst thing in the world?
Yeah, well, it taught me that lesson that, guess what? Premium crush. You know what I mean? I had it right, but that premium crush killed me.
You were paying too much premium.
Oh, I paid way too much premium. Yeah. And you wouldn't believe it.
Somebody was on the other side collecting all their premium.
Oh, just like Kevin said.
Probably Kevin.
Yeah, it was probably Kevin. If it was GE, it would have been Kevin.
There you go.
It would have been me. That's right, exactly.
Oh, man, I'm telling you. And that's why it's so important, folks, to not only if you're going to trade options, please listen to the show because, Scott, Kevin, Cindy, they walk you through something that just... They make it common sense, which is really cool. Do you know what I mean? That's
as common sense as you possibly can.
Right. Yeah. Right. No. So
we try to keep it light. We try to keep it informative, and we try to keep the day moving with real time, news coming out as it's happening.
I know. How cool is that?
There's
right?
a lot of news going on right now.
There is,
no matter
man.
what you're talking about.
There is.
Right.
It's coming from everywhere, too, man. And, part of Draghi's speech out here this morning, folks, was pretty... He was saying, hey, listen, man, all these central banks are doing this. You know what I mean? It was like, it's not that... We all know that, but it's almost like, okay, man, they're all on board here. Sure. You know what I mean? 12 o'clock, folks, right here. I'm Mr. Kevin Inks, TD Ameritrade Swim Lessons, right on your cell phone, TFNN.com, hit Tiger TV. Kevin, thank you so much.
Guys.
We look forward to the show at noon. Have a great one, man. Have a safe one. Stay right there, folks. Tommy and I are coming right back. Dow's down 26, Nasdaq's off 11, S&P's are down 5.5.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 51, Nasdaq off 14, S&Ps are down 7.5. Gold is flat. Silver right now is only down 2 cents. How do you like that silver market, Tom?
Not much action, down 2 cents, right?
Folks, that's silver market. If you haven't traded the Nadex product, well, first off, if you're trading gold or silver, you should be trading the Nadex product, because I don't know how anyone.
Once you pull up the chart,
yeah,
silver,
you're going to see this in silver, folks.
Right.
This is like about as sick as you'll ever see something. And just
it's such a large commodity.
Yeah,
it's not like it's a small traded.
And the point is that you're talking about it went from $17.72 down to $16.75. Now you're at.
I mean, it's even better. The way I would put it is, it went from 17, like. Well, 17, right, up to 1770, and
right,
then down to 1670,
right,
and now back up to 17.
Yeah,
that's amazing.
Yeah,
it is.
It's like so far over the top. It's insane.
To back being within 5 pennies of where we're at on the close. That's what's.
Yeah, to where it started.
That's what I'm saying.
Yeah.
Yeah.
That is nuts.
Yeah.
And that's why, folks,
that's some volatility.
Check out the Nadex platform, because the difference is that defined risk deal is a whole different ballgame. So I believe that move, Tom, I think, let me just look at that. So it's $5,200 you're putting up. And 1 point is $5,000. That's a $5,000 move.
Yeah. Oh, for sure, right? And it's 5,000 in like each direction too.
Yeah.
It
wouldn't matter whether
30 cents down, a buck up, 70 cents down.
Wow, that's sick. That is really sick. So if we take a look at the...
There were probably some margin calls there, right?
No, they took them out. Either way, with something that intense, they took them out on both sides.
Oh, for sure. It's your full speculator 5,200 or whatever it is.
Right. Yeah. Isn't that crazy?
In the span of no time.
Yeah. Amazing. So, good old King Dollar. Let's go look at King Dollar, because I don't think King Dollar is going to be able to handle price out here, which is going to be really weird, man. And, that's just the opposite, of course.
That matters.
Yeah,
for sure.
So King Dollar opened today. Now, this is the dollar index, folks, okay? It opened at $94.51. It first, I guess it spiked down, You
can be trading these currencies in Nadex, too, because that's quite a move.
Exactly.
We don't trade them as often, but I know that Daryl trades them in there. And people trade them heavily. When we were up at that Traders Expo in New York,
big time,
talking about a lot of FX traders.
Right.
These types of moves are probably why they enjoy that defined risk, just like you're talking about.
Huge. Yeah. So we went from 94.51 to 93.84, back up to 94.63, and now you're at 94.46, and I suspect
1 penny off the close, right?
Yeah.
It's like same deal. Yeah.
And we'll see. It doesn't look to me like it's going to handle price. So we'll see where this whole thing shakes out. If we go inside the Dow Industrials, because there's so many numbers coming out, it's going to be wild.
And I was just looking, we got natural gas coming up at 10:30.
Oh, I love it.
Yeah.
Let's go to Duncan Steve up in Nashville. Hey, Steve, what's going on?
I'm not there yet. I was just going to head out, but I figured I'd give you a call first.
Well, we appreciate that, man. I wish we had a little button that we could just put it through the airways to give you that Dunkin' Donuts coffee.
Your hot morning coffee. There you go.
Yeah, hey guys, I was looking at the bulk shippers. I know there's ORIG, which is Ocean Rig, I think.
Okay.
But the one I've been looking at, don't own it yet. EGLE, Eagle Bulk.
Let's take a look. Okay, so dry bulk vessels. Yeah, dry bulk vessels. Okay, so they're shipping iron ore, coal, grain, cement, fertilizer. The low for the year is 30 cents. The high is 11.58.
And on the 7th of April there, I didn't, 6th or so, 5th, it looked like a small start of an AB.
Yeah.
Volume.
Now, this is what you have here, right? Normally, if you look at something like this, it's like, oh, this looks pretty good, because you've had folks here, these big spikes. But what I've found is that when you have an equity that's got killed like this, right?
Yeah.
And then you get a bounce, And, this equity went from $16, folks, down to 40 cents. But when you got the bounce, Steve, right, and you couldn't take a swing point out, it's a problem.
Yeah, the bounce on the 12th.
Even the monster one that went up to 350 on March 11th, I guess, or the week of March 11th, right?
Oh, okay.
And it couldn't even take it out. Let me have the other one. What is it? ORGN?
ORIG.
ORIG.
Okay, let's take a look at that. Because okay, so this one here, it's at $1.40. So the last swing up was $1.67. $1.40. Interesting, man. I'd make sure that one of these swings can get taken out first, man, and then you buy the retracement. I'd like kind of like what this is set up with, but I've definitely found that when companies going out of business, you can get a big bounce with volume, and it looks really good. But if it did not take out a swing point, it doesn't mean a thing. And that's why even in my book, I always put that swing points are where the market talks, walks, and squawks. They release more. It releases more information at a swing point.
And the swing point you're referring to, Tom, is which one?
Well, on this one here, on Origin, right?
ORIG.
I mean,
Ocean Rig.
Ocean Rig, rather. On Ocean Rig, if it got over $1.67, that'd be good. Because that's a small swing. You know what I mean?
I see. Yeah.
And it went last time to $1.47. If it got over that, then you could buy a retracement. That'd be the first time that it got over a swing point. On Eagle, EGLE, this would have to, even if it got over,
What happened, in that like March 1st run from 50 cents up to 350 and then back down?
I don't know the particulars, but I know there's some hedge fund folks that own a lot of it. For some reason, they invested in it, and part of it was they had to get back in shares or something.
I happen to look at just the market cap, and I think for Eagle, it's only like $23 million is the entire market cap.
Wow.
And just when I see something like that, I would get worried because guess what? If there was really easy, smart money to be made,
right,
somebody would just buy the company. I would. If I was a billionaire, I would say.
Yeah, so there's no doubt. See, the debt must be huge because it's $23 million market cap, and they take in $103 million.
Can you pull up the company profile for Ocean Rig?
Yeah.
I'm curious in the same.
All right.
And a lot of these gold companies have had huge run-ups, but if there's massive equity somewhere in that company, smart money, and at least Ocean Rig, that's at least $115 million. That's where it gets a little bit more difficult for one investor just to come in and swoop it. But when you're talking about a company that's worth $10 to $20 million, I mean even a company insider. What happens is would make a private equity bid, or that's just stuff I evaluate.
For sure.
So there's not like a massive, in my opinion, that it would be less likely there's that huge opportunity when somebody could just scoop it up for an easy loan.
No, because look at this, right? So Ocean Rig is $117 million market cap, right?
Yeah.
Well, they take in $1.5 billion. Right. So guess what? That means that they have debt that has to be extraordinary.
And at least when it's a more valuable company, right, you just can't come in and buy it all. So hedge funds will come in, they'll bid up the shares. Whereas if it was that easy of money, the hedge fund would just buy it all.
Totally.
Gotcha. Thank you guys very much. Time for coffee.
That's a beautiful thing, man.
See you later.
You stay right there, folks. Tommy and I are coming right back. Dow right now is down 19. Nasdaq's up 4. S&P's are down 4.5. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas, that just come out. Let's take a look. Natural gas inventories rolled 2.48 trillion cubic feet.
It's not cubic feet, but trillion.
Oh, is that? Yeah, okay.
Billion. Oh yeah, no, you're right. Sorry. 7. Yeah, they're all the news are flying around. We have the number over here. Let's just blow it up so we can see as the charts trading live. So we're at about 207.
Yeah.
Bouncing around, and that's a pretty small bar compared to usually. Here we go.
Now, you know what's really interesting, folks, is that right at the commercial break, you know, we bought one contract. Tommy said to me, bullish or bearish. I said, well, it could hit the high of yesterday.
And you said maybe it could go up to like 224.
Right. So we just bought one contract to see. Now, this is what's intriguing, though, is that we thought the contract was really inexpensive, right? You know what I mean?
Yeah. No matter what, it's a low risk trade. And it's probably a lower probability trade, right?
Right.
And we'll walk through it. People will realize why. But it's only until 11 a.m.
Right.
Number one. That's the huge factor that you want to be aware of no matter what.
Right.
The bottom of our floor is 205.
Right.
The top of our floor is 225.
Right.
So we're dealing with $200 in spread there.
Yep.
Okay? And where we got in it, just to make it as easy as possible, was at, I believe, about...
It cost us $30, I think.
Yeah, $32. 208.20.
Right.
And so here's so people can see the exact risk reward. You're risking $32, which is the difference from 208.2 to 205.
Right.
And then your max profit at 225, it'll be worth $200 the entire contract, so you'll be profiting 168. And coming into news for a half hour, and we were only paying above, there's a lot of intrinsic value in this, which is nice, right?
I know.
That's where you're only paying even give maybe 10 cents, which is $10 in this contract of premium.
Right.
Coming into news for a half hour, and it's going the wrong way, but you can see really right now at 206.7, we're still getting $17 back. We're getting back above 205.
I know.
That's what I'm just explaining how these work. Now we're at $20. Now we're at $24.
Right.
With the risk reward parameter like that, if you expect high volatility and you have a bullish directional bias, that's a great trade, I think.
Yeah. No, and it's so wild.
And you can see that we're almost learning. You learn from every trade, right? You learn from just your risk, your reward, your premium, where it lines up, And that's a nice trade when, and as it was coming down, it was quick. We literally had about 30 seconds, and I said, let's just at least buy a contract, $30. Right. And
what's cool, and this is where just option market makers, and they say the option market itself is just so accurate, meaning, and it's like, it was small premium we were paying, but guess what? You get a small spread right now compared to what normally happens, right?
I mean, that's
Isn't
what
that weird?
Is. We pulled it up, and you can see that. So the market's at 208, and it's oscillating with 5 cents, down to each side. So it's about a 12. I'm sorry, five. Is that thousandths? Yeah, 5 thousandths of a point. So you're talking about barely a half a penny. I had to break it down in my own head. It's half a penny. And, here right away, if we just let this expire at 208.1, that's $31 that we're getting back, which is great having your risk so defined, barely at market. And that's what we talked about, with Mike when he called in, how there was too much premium we felt in that trade. Coming into news, I think I wouldn't have taken the other side of that trade. Let's put it that way.
No way.
For the half a penny in premium, for $168 of risk, that market maker provided $32 of profit.
No doubt.
So we'll see how it shakes down, but we're getting a nice good pop, and as the news stories come out, we'll break down the exact stockpiles of where they came.
Right.
But you can see the market is a little bit bullish for sure.
Going with us. And if we go over to the NDX 100 again, because I actually
Do you want to take on Bloomberg or on Nadex?
No, on Nadex, because I took the same trade this morning.
Okay, just looking at where you were. Sure,
the same trade was out here again this morning. The trading gods have been nice out here, folks.
Because if people were watching yesterday, they will remember how we talked about exactly where you were in the spread.
Right.
You have the master spread, 80 points, right? 44.90 to 44.70. Middle of the spread is 44.30.
Yeah.
You got in yesterday, I just happen to remember it right above the middle, which you're saying was more beneficial if you're paying a small premium. And you got in at 45, like 32.80, I think, yesterday. And you're in 45, 35.20. So you added a slightly even better. You're risking about $350 to make $450 for a max profit. You're paying probably nothing in premium compared to what you think the market is going to move with you at.
Right. And what's amazing, folks, is that yesterday, so picture, and this is where this product comes in really nice too. So you know what the defined risk is, and you can get out. Okay. The bottom line is that yesterday this thing went against me in a big way because it came all the way back up. And guess what? Then it came all the way back down. I think I lost $50 yesterday.
Okay.
And I could have closed it. Now this is important to wrap your head around, folks. Is that on these on the contract I'm trading, it's 415 contract. Okay.
Yes.
So what happens is
daily indices right now. Yes. Go ahead.
Yeah.
Yes.
So what happens is that, especially in earnings season, right? Be aware that at 4 o'clock, what's coming out, because it can help or hurt you very quickly. Do you know what I'm saying?
As you're saying that, I'm pulling up the den, and they're saying Microsoft, Google after the bell.
Yep.
Boom. Talk about two. If you're going to hold this till 4 o'clock, there's going to be huge action in those 15 minutes.
This is what's so cool.
Point.
So watch this. And I know that Google comes out. Google is the one millisecond after 4 o'clock.
4 o'clock and 2 seconds the news releases.
And then I'm not sure about Microsoft, but that's crucial.
Either way, Google coming
that's
out
crucial
at
to understand, man. You know what I mean? It can get you both ways. Now, another way that you can do this. Check this out. Now, this is pretty cool. I happen to put these on in the morning, and I'll go figure out what I'm going to do the rest of the day. But I've done this at 3:50 this afternoon.
Yes.
What ends up happening is that if you are close, this is where this gets really bizarre. If there's a contract that's close to the bottom, and you think you're bullish, that something's going to come out bullish, oh my God, that's when you want to be in those things.
Yes, because maybe there's not too much premium priced into it.
There is.
I mean, that'll be what happens.
Time-wise, exactly.
Right,
exactly.
For sure. In the same way, I started to pull up a great trade looking at that is daily binaries. Same deal. They expire at 4:15.
That's even better.
That's a good opportunity in the same right when at about 3:50, 4 o'clock. People are going to be paying attention no matter what. As in, there's going to be some premium in there. Because
there should be.
Right. There should be. Right. So, you don't know. But at least keep them on your radar, right?
No doubt.
And check out that natural gas.
Look at that.
So we have until 11 o'clock, which is a lifetime, it feels like.
It is.
7 minutes after they just released the numbers. And you have a great pop right now. And where this is trading at, let's just take a look at it. So the market's at about 209. And this is where, it's right at basically where the underlying market's at right now. So we got this at about $32 and it's worth about $40 right now. You can see already like a 25% return.
Right.
And your risk reward is just hugely in your favor. So
and it
happens to be that we're profitable, but no matter what, I like that trade. And that's where you just want to, if you ran that scenario 100 times, that's the way I think of it.
Right.
Run it 100 times, are you going to make money? Run it 1,000 times, are you going to make money? And that's a great trade. Regardless, we just happen to be making money right now, but that's a great trade.
Yeah. And let's go over to, let's see what's happening at the NASDAQ, because the NASDAQ's making a run right now. You stay right there, folks. Okay. Tommy and I are coming right back. Yeah, exactly. Dow right now is down 15. NASDAQ's up 5. S&Ps are up 2. Gold's down 330. We're going to be coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. As they say in Boston, just wait a minute and you're going to get a change of weather.
Quite a market.
Quite a market. Right now, you get the Dow down 4. NASDAQ is up. NASDAQ caught a bid. It's up 10. S&Ps are down, let's see. They're still down 2. Gold is down $1.40. We have silver down 9 cents. Still over $17, though.
Why don't you take a look at the NASDAQ? We're looking at that over
the break.
The
NQs gave everything back, reached all the way higher again. So we started out, that's where I sold it this morning. I sold it at, when it was up there like 45.35.
Yep.
Because now the 45.14, now it's right back up there. So
The day is young, though, right?
Oh, yeah, big time. And if you want to see, folks, this is where, when we came down this morning, okay, right at the 9:30, it came down 11,000 contracts. Well, guess what? You were going into 16,000 from yesterday morning.
Could have taken some money maybe there.
For sure.
Yeah.
For sure.
Yeah.
And that's, not only if I was just day trading future, that's where it would, because 11,000 to 16, it's like, okay, you're going to get a bounce.
Yeah.
Now, the bounce that we have is anemic also, because if I can now watch this. Yeah. This is what happened yesterday. It goes, this is pretty cool when you do this, okay? So then you go to the other side, and what it's going into is that the 9:30 from the prior day and 15,000. So, like, who's ever sitting there, if that's you as an operator sitting there, it's like, okay, man, you coming up to me again? I'm going to sell it again. Isn't it wild when you just look at it like that, though?
Two areas of big-time supply and demand, right?
Yeah, exactly. And, they're at those levels and saying, okay, what are you going to do?
And so we'll see our natural gas. We have till 11 a.m., which is like 16, 17
Which is a
minutes.
lifetime.
It is. It's a lot of time when you can see right now, if it were to expire, it'd be worth about $45. And, the likelihood that it would ever reach $2.25 by 11 a.m. is not very likely. But you have a lot of upside, you have a lot of downside.
Right.
And you only had $32 at risk to initiate the trade.
Isn't that crazy?
It is.
I never thought in my life you could risk $32 and make $160.
And coming into news, that could, you never know. As in it could have spiked. But you just don't know when those numbers come out. And maybe can we try and dig into that news? Maybe let's see if we can find the fundamental driver.
And what's really cool is that the aspect of, if in fact it looks like it's going to get some juice here, and it is off the bottom. If it is off the bottom, then that scenario can happen, meaning that you can get explosions with natural gas going topside. Because as that man Andy Heck was saying, there's so many people shot that contract.
Yes.
Do you know what I mean?
And look, so the stockpiles were up 7 billion cubic feet, and the median estimate was only 3 billion cubic feet.
And now that's bullish, man. That it's still up.
Well, yeah, that is by itself bearish, right? But you're saying the fact that it rose is really bullish.
Right.
I would agree.
Yeah.
So I mean, that even speaks better for our trade, because guess what? You were bullish, and if you ever got a shrink in stockpiles, I wonder what that could have shot up, right?
Right.
Which is just, those are the scenarios you want to run in your head. The likelihood of all those things come and do.
No
see
doubt.
what happens. Yeah.
And let's take a look at some of the other commodities. And, of course, don't forget, folks, you stay right there. Our man, Mr. Basil Chapman's going to be coming up next, growling a problem with you. Swim lessons, Steve Rhodes, Dave White, myself, and
Andy Hecht is back.
And
he's back from Denver. He made it to Denver, and he's going to make it back.
That's a beautiful thing.
Gotta love it.
So the commodities out here today, you get natural gas up 0.8%, cocoa's up 0.6, nickel's up 5, cattle's up 0.3. Coffee's getting smoked. That's down 2.5. Orange juice is down 2. Wheat's down 2. Crude's down 2. Sugar's down 1.8. Corn's off 1.2. Silver's down 0.6. Not bad. Gold's down 0.2. So the dollar, folks, the dollar, the euro, those no doubt are the movers out here. Let's go look at the XAU and the HUI. Because, coming into that close yesterday, man, they hit those gold stocks big.
I saw.
Wasn't that a trip?
Yeah.
So
they hit gold big.
They did. They did.
Not just the stocks.
So the XAU basically is flat. The Gold Bugs Index was flat also. It's intriguing, man.
Yeah.
Newmont, let me see where Newmont is. Newmont came out with numbers last night. Yeah, Newmont's at a high. It's up $1.61. And let's see what they had said. It's a little hard to... Oh, there it is. So...
Yeah, 34 cents earnings per share versus estimate 18.
That's good.
And $2 billion in revenue versus 1.85, 1.87. That's $150 million in revenue, with a lot of it going into some nice earnings for them. So,
no doubt.
Yeah.
No doubt. Now, just to go over how these gold companies and silver companies sell their gold, so you have these gold banks, okay, which are all the big banks. Not all the big banks. JP Morgan is one of the biggest ones, right? So if we were in the gold business, the silver business, what happens is this is how the majority of them sell their gold. you call up, we'll say that, okay, let's say we get 100 ounces today. We think we have 100 ounces, okay? They book 100 ounces. They get the price today. It's a moving 30-day average you get.
Okay.
It's not like you get it every day, because I was asking a couple of different CEOs.
Yeah, that's nice. I bet they enjoyed that, actually.
They do, because it goes both ways.
Both sides
it goes both ways. So it's a moving 30-day average, what you get. Because then what they don't know is that it's not that they have full bars then too. They have to get assayed. Okay. So what happens is that we'd say, okay, we think we have 100 ounces.
I got you. And there's a process.
It might be a little bit more, a little bit less, exactly. But that's pretty cool because when you're looking at the marketplace, then you look at
both sides. Go ahead.
Yeah, it's both sides.
Well, both sides aren't in that business to be trading for the rise or the decline of price of gold. They just want to make the margins. They want a stable price. Both sides do.
Exactly.
So that
so
makes
that
sense.
they can look forward ahead.
Right. And so they're just basically making their margins or making them profitable versus making or losing money depending whether that 30 days gold goes up or down. Right?
That's right.
Which they're already inherently doing.
That's right.
There's more risk.
That's right.
Yeah.
And what does happen, which is pretty cool, is that if you're the bank, of course, you know the amount of production getting done, which is pretty cool. Knowing that, okay, what am I going to do? Am I bullish or bearish?
When you're deeply involved in an industry, right?
Yeah.
You get a feel for how that industry is doing more than outsiders.
Totally.
For sure.
Totally.
No matter what you're in.
And on a JP Morgan, what ends up happening, of course, they know, okay, who's the buyers on the other side, meaning the central banks, okay? Because the bottom line is that,
yes,
nice place to be,
right? Players, for sure.
Yeah,
That's
no
right.
doubt. Market out here, let's go take a look at the volume for a second because the volume is going to be really crucial today. Because if we do get an expansion of volume and the NDX stays down at lower price, that's going to be a big heads up. Thus far, let me just see where the Qs are at. Okay, now this is going to be crucial as to whether the Qs are going to hold price or not. And this is why. We come down to 40 million shares on Monday. We went up 18 million yesterday and it didn't hold price. Right now, we're going to have a lot more than the 18 million. We're at 6.7 million right now. So it's going to really matter how the Qs close and where it is. This is good to know. It's not like the... So Google... It's going to be interesting if Google just brought the NDX up by themselves. And look at they might have. So Google, folks, just went from
a $10 rise.
Yeah, it went from 749 to 758. Yeah, interesting. You stay right there, folks. And man, Mr. Basil Chapman's coming up next. And don't forget.
Nope, we got one more.
Oh, sorry.
There you go.
Awesome, man. Cool. You stay right there, folks. Tommy and I come right back. Dow's down 20, Nasdaq's up 10, S&Ps are down 350. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow Industrials right now down 14. NASDAQ is up 13. S&Ps are down 250. If we go look inside the NDX 100 and see what is the strength there, you got Tractor Supply. Now, this is pretty cool, folks, okay? I want to pull this up for a second. So, Tractor Supply up $5.36. This is another indication. Let me bring this back. This is a commodity stock, this baby. What Tractor Supply is out in the Midwest is like a big Costco's, but for farmers.
For tractors,
yeah.
sure.
For farmers. I know,
farming,
exactly, exactly. And do you remember Ken Shreve? Okay,
sure.
Ken Shreve's the one that educated me on Tractor Supply years ago, because it showed up in the IBD, the 50 list, right? Nice. And this thing was, if we bring this back, I mean, I think this thing was like so low it was sick when it was. Yeah, there it is, exactly. So the commodity run there, when it was starting, I remember when this was starting. Look at this thing. This is crazy. 2002, it was $5, the first run.
Amazing.
And then it went from $5, and at the peak of 2006, it was 15.
It's still huge, 300%.
Yeah, right. Exactly. Yeah. You know. But now look at it, right?
Right.
Now, see, look at that, man. This run, this is sick, folks. This went from $7.75 in 2009. And it's trading at $95, man.
Yeah, it's like 1,300%.
Wow. Everyone else must have went out of business selling supplies.
Crushing the competition, right?
No doubt, man.
Yeah.
That's pretty intense. There's no doubt about that. Gold is still hanging tough. Silver's up there. King Dollar's up $1.34.
And let's take one more final look at where our trade's ending up.
Oh, yeah. It's, we might make a buck.
Yeah.
We get 4 minutes. Hey, we're up $4.
You know, we got in at 208.2.
Yeah. It's at 209.2.
And yeah, it's done in 4 minutes. But, you know, no matter what, that just illustrates the great risk reward that you can set up. Where we've seen the type of market action that makes me think that was a good trade. Because when you get those types of swings, you know, going all the way down to almost 206, back up to 210.
Right.
That's the full.
I can flat out, I will not trade gold inside the futures market. There's no reason to.
And this is good. We're getting a nice little bounce even for the final 5 minutes, which really, and that's what we talk about, where 20 minutes left is a lifetime when you have such limited downside and huge upside. And
what Tommy was showing me at the break too, folks, is that we brought up the binaries, and it was pretty cool in the binaries, right? As to
this 2090 level we were looking at, we had a trade we could have gotten in and risked about 40, to make, and the same thing, that 208 trade would have been great. That we were only risking about 60 to 66,
and that was above the market,
and that was when it was trading at 208.2.
Right.
Both of them would have been good trades. And that's what I was saying. That's where the same thing, just like you're talking about, where you can trade an index at 4 o'clock with 4:15 at the end. When you're trading some of these 11 o'clock binaries, 11 o'clock spreads, 10 minutes left, you're not paying any premium. And if you expect movement in that time, and it's only 10 minutes, sometimes you're going to be wrong. There's going to be no movement.
Right.
But sometimes, especially on news, see what happens.
There's no doubt, man.
Yeah.
No doubt. You stay right there. Our man, Mr. Basil Chapman's going to be coming up next, and you can expect, folks, this volatility to continue. There's going to be a lot of numbers coming out after the close, and let me just see. Well, Google's coming out after the close. And MSFT, let's go see.
Maybe you'll have to take a look at some of those spreads or binaries as the 3 o'clock wraps up, and then open up the 4 o'clock hour with fireworks.
Yeah, because what does happen is this, folks. Microsoft and Google are a big part of the NDX 100. I'll get the numbers as to what they are.
Nothing like trading at 3:59 p.m., right?
Totally, man. Yeah. That's where it's at.
Yeah.
Much
quick trades with defined risk. And a plan.
Huge.
Yeah.
Dow right now is down 8. Nasdaq's up 13. S&Ps are off 2. We got the gold contract down $1.90. Stay right there, man. Mr. Basil Chapman's coming up next. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.